Hi guys, today we're going to cover a topic that can really help you save thousands of dollars and protect your trading account. Today, we'll talk about how to choose a good expert advisor for automated trading and avoid falling for yet another miracle bot that promises you the world but only brings headaches. Of course, I could just say, go to my website intradaysoft.com or my MQL5 page and you'll definitely be able to find the best expert advisor for yourself, one that brings profit with minimal drawdown. But the world of automated trading doesn't revolve solely around my products. So in this video, I'll try to give you some genuinely useful tips on how to buy or find a good trading bot and keep your capital intact and even earn a stable profit every month. So let's get started. So the first thing we look at when choosing a trading bot is its real trading monitoring. If you see a flashy cover, a loud description, and a phrase like 500% profit per month with no other proof of profitability, just close the page and run, bro. The first thing you should look at is the monitoring. Monitoring is the real-time online tracking of an expert advisor's trading operations, which is conducted on third-party platforms. That is, for example, on services like MQL5, MyFXBook, or other similar platforms. If a developer is confident in their product, they will always show its real trading monitoring. Ideally, the statistics should be kept for 3 to 6 months or longer. In general, the longer the better. This way, you can see that the advertising claims are not just empty promises and loud words, but that the bot can actually make money and truly survive. Not only in a strong market, but also during rough phases when the market is as shaky as after 10 shots of tequila. Another important element, guys, is the rating and reviews. It's simple. If an advisor has a rating of about 4.5 stars, that's excellent. Why not 5? Because perfect products don't exist, and haters and constant complainers are everywhere. So if the rating is a perfect 5, it's most likely been manipulated. Read the comments. If people are sharing real observations, discussing their results, and clarifying details, it means the product is genuine. If you see the same generic statements everywhere, like this is an awesome trading bot, bro, that's a red flag. Walk away. Now, the most important thing is analyzing the trading style. Check if the bot uses martingale or averaging strategies. If it does, just run. Because martingale isn't a strategy, it's pure gambling. Such systems might make you happy for a couple of months, but then, boom, all your deposit is gone. Averaging is the same thing. It's a road to nowhere. Remember, a good bot always trades with stop-loss orders. That's a must-have condition. One more time. An expert advisor should trade without averaging, without martingale, and every trade must be protected by a stop-loss order. This is mandatory. And one more important point, don't trust strategy testers. In fact, you don't even need to test an expert advisor in the MetaTrader 5 strategy tester. The thing is, when creating scam products, programmers make it so that the expert advisor earns millions in the strategy tester. So what's the point of running the advisor to see how it earns in the tester if the tester itself can be a complete fake? It's much better to just go back to the point that a good trading bot always has monitoring of its real trading. In other words, if you want to see real trading statistics, don't look at the virtual results in the strategy tester. All of that can be completely fake. Look at real trading monitoring. And it's better to just forget about the strategy tester altogether. Let's move on. Let's analyze profitability. It should be realistic. And don't believe promises that you can make 2,000% a month with some bot without any risk. That's not trading, that's a lottery. Realistic figures for a good advisor are from 50 to 150% per year. The ideal benchmark is about 100% per year with minimal drawdowns. Again, you need to assess profitability using live trading monitoring. Here's another useful tip. Diversification is your best friend. Don't put everything on a single bot. If you want to feel like a small hedge fund that is unsinkable, choose 3, 5, or even more expert advisors with different strategies. Let one work on trends, another on corrections, a third one scalp, and so on. As a result, you'll be able to split your capital among reliable experts and achieve excellent diversification. So if one bot is in a drawdown, the others will pull your capital up. In the end, you sleep soundly while the system works like a well-oiled machine. So let's sum up what you need. Monitoring for at least 3 months, preferably 6 or even longer. A rating of 4.5 stars. No martingale, no averaging. Every trade must be protected by a stop-loss order. Profitability should be realistic, from 50 to 150% per year. And not just one bot, but ideally a whole portfolio of 3, 5, or even more expert advisors. And if you stick to these rules when choosing a trading bot, you'll already be 90% ahead of those who just believe in miracles and buy yet another so-called holy grail. And I'm not saying goodbye.